Crypto is all about the narrative of the day. It's always about where's currently the attention. Just a few weeks back, everybody was talking about meme coin trading, but now this is slowly shifting over to decentralized finance. So there are many perpetual futures exchanges like Avantis that are currently appreciating, but also protocols that are involved with Bitcoin like Merlin are going up. So in this video, we're going to look at Merlin. We're going to look at the data most people aren't considering. We're trying to figure out how much longer this rally can last. Merlin chain is on a massive run. It's currently at 27 cents. It has shot up to 350 million of market cap and now has slightly come down again. But where does all of this excitement come from? Who's buying here? Who's selling here? What we see here, this is the total value locked, or the capital that's currently on the Merlin chain over time. 1.5 years ago, this peaked at more than 500 million and since then is on the decline. It's now only at 51 million. Again, while the market cap is roughly 5 times that. Here's the staked Bitcoin over time. Again, this went up and subsequently declined. And of course, the unique selling point of the blockchain is a high return on staking Bitcoin. It's not just Bitcoin staking that gives high returns, it's also the Merlin token itself which can be staked for a massive APR of 45%. 31 million MERL tokens have been staked. Is this a lot? Is this a little? It's actually not that high. Let's have a look at the tokenomics. And here's the potential problem long term. I am not a fan of this chart over here. And I try to keep it as objective as possible on this channel. I talk about the positives and the negatives. I don't just hype up random cryptocurrencies. That's what makes this channel different. Merlin started out with a liquid supply of 229 million. And this grew all the way to 963 million. So the supply more than 4x just within 1.5 years, and it will continue to grow. And that's of course a problem. If the demand doesn't grow as quickly as the supply, then the price has to go down long term, especially if the ecosystem isn't growing fast. Here's the decentralized exchange trading volume that we have on Merlin. It used to be very high. There was a lot of activity, but now it's a former shell of itself. Just a few hundred or a few $1,000s getting transacted per day. Here's the app revenue per day. This chart doesn't look that bad, but just have a look at the scale here, right? This is not above $100 on any day. And here's the net inflows in terms of capital. Again, at the beginning, during launch, there was excitement, but that excitement has died down. And so that explains the first part of this chart here. This is now Merlin relative to Bitcoin. The token underperformed BTC by 93%. So we can explain this by the lack of usage of the protocol and by the very bad tokenomics. But what we cannot explain is the subsequent rally. Where is this coming from? Why do we suddenly see a 150% outperformance versus BTC recently? There aren't any major news. There is an integration with the BNB chain, but many chains have this. When we look at the Twitter profile also, there's here and there an interview, etc. But not really anything that would justify a price rally like this. My impression is that Merlin is the GameStop of the crypto world. As in, all the fundamental data looks really poor. And so a lot of people are currently betting on falling prices. Because of that, there is price manipulation, as happened with GameStop. People don't believe anymore in 45% staking rewards. People don't believe anymore in getting more than 20% return on Bitcoin. Most people rather shy away from this because more often than not, this is just Ponzi-nomics. This is not necessarily long-term sustainable. And so here's what I believe is currently happening. In the last 24 hours, we did not see a lot of spot trading volume. Only 44 million on OKX. But on the perpetual futures market, so on the bets on the price, where people just bet on rising or falling prices of Merlin, we saw 606 million worth of trading volume. So really, the price discovery happens on the bets on the price, on the perpetual futures, and then arbitrage bots balances out with the spot market. We can see those occasional short squeezes. This is the funding rate of Merlin over time. It tends to sometimes go extremely negative. This is when the shorts have to pay the longs to bet on falling prices, and the price tends to spike up very quickly. And with those price spikes, we see massive short liquidations. So we're seeing regular short squeezes. Just the same thing that we saw with GameStop. With GameStop, it was the hedge funds that were betting on falling prices, and then it was the masses, the Reddit community that bought up GME on the spot market, pushed up the price and squeezed out the hedge funds. Here it's the other way around. Here it's the masses that are betting on falling prices of Merlin because of the poor fundamentals, and then the market makers that buy up the token and push it up short term at least. Just have a look at the open interest of Merlin and how much it correlates with the price itself. There's now a massive amount of bets on the price. And whenever more people bet on falling prices than on rising prices, we get another short squeeze. But then when enough people have been liquidated and they give up on betting on falling prices, that's when the open interest or the short-term capital in the asset comes back down again. And that will also bring the price with it. So when open interest is about to fall, the Merlin price will also fall. Just have a look at this. Recently, we saw 20 billion worth of trading volume on the perpetual futures market for Merlin. So really, it's all just market manipulation. This is not a natural development at all. And so the long-term fate for Merlin is likely going to be the same as for GME, right? We've seen a massive spike, then a lot of volatility, a lot of manipulation, but long-term, the short squeeze tends to deflate. I have my doubts that Merlin is a great investment given this total value locked, given the fundamental data. But could the price short-term squeeze one more time? Potentially. Will it be still at this market cap 1 year from now? I doubt it. Again, over time, there's just too much token inflation, and that's the main issue. More and more tokens hitting the market creates constant sell pressure over time. Now, there is somewhat of an argument to be made that altcoin season might be imminent. And so that's based on the others dominance chart. It shows how much of all of crypto in percent is currently in the altcoins that are not in the top 10. And this seems to bottom out at very similar levels, and it might have just bottomed recently. In the past, when we were at similar levels, the altcoins outperformed the rest of crypto by more than 300%. So I understand this argument, but there's a bit of a problem with the argument because the other dominance measures the market cap, but market cap is a very different thing to prices. There's a dedicated website called Tokenomics AI that does nothing but measure the token inflation of various altcoins. So let's have a look at Aptos, for example, here at number 1. This is the Aptos price relative to the altcoin market cap. Since March of 2023, this went down by 88%. And the reason is an ever-expanding token supply. As there's more and more tokens hitting the market and supply is higher than demand, then of course the price has to go down, at least relatively speaking. This is the Aptos market cap chart over time. It's at very similar levels compared to February of 2023 at roughly 3 billion, so barely a change. But in February of 2023, the Aptos price was at $18. And now it's at $4.39. So this is how much impact token inflation actually has. The others dominance does not look at prices. It only looks at market caps. But we do not get market cap returns. We get price returns. Market caps can be unchanged. Prices won't be unchanged if the supply just keeps on increasing. Now, how much of a problem is this really in the grand scheme of things? Is this just a few select altcoins, or do we see this on a broader scale? The answer is somewhat depressing. We unfortunately do see this on a broader scale. So each week we see roughly 1 billion worth of token unlocks. If we do not see at least 1 billion of additional demand coming into the altcoin market every single week, then the prices have to come down. The others dominance might be unchanged, but the price of individual altcoins definitely do get negatively impacted. Aptos is currently the 42nd largest cryptocurrency. It's just an example. Let's have a look at the top 100 cryptocurrencies. In the last year, Bitcoin went up by almost 100%. We've got 26 out of 100 altcoins that did better than Bitcoin. 73 altcoins did worse than BTC. And so here's what I personally do. I'm simply just betting on bad altcoins to continue to do worse. So we can just flip this chart around. This is the Bitcoin price relative to the Aptos price. At the bottom, we've got the others dominance again. So the others dominance did not change at all in the last 2 years, right? It went flat while Bitcoin's price relative to the Aptos price appreciated by 400%. So this is really where I believe the alpha in crypto is. It's the market inefficiency of highly inflating altcoins. I'm following this strategy already for roughly 4 years. So I'm betting on poorly performing altcoins. I'm betting on them to go down further, while I'm betting on rising Bitcoin, Ethereum, and Solana. And because of that, I outperformed just dollar cost averaging into Bitcoin. Dollar cost averaging into Bitcoin is shown here as this light gray line. But I got the performance that's shown in the black line. So there is a way to beat the market without trying to find the few winners. We can simply bet on the market structure, on the constantly increasing token supply of many altcoins. It's maybe not as straightforward as just buying a single token. Some things have to be learned, but that's why I made dedicated videos on the topic. I try to make this as simple as possible, so there's really only 2 videos that have to get watched. The first video is using perpetual futures to bet on relative valuations. The second video is risk management with relative valuation bets. Once you've watched this 1 hour of content, you know exactly what to do to get this kind of performance, to set up positions like this. After you've watched those 2 videos and you've joined the community, I will send you my favorite trade that looks very similar to Bitcoin relative to Aptos. If with that trade you do not make money after 1 month of holding the position, then I will refund the membership fee to you. So those $125 are actually not what you're risking. If you don't make money with this favorite trade, you just get that money back. Just message me and I will refund you, no questions asked. Of course, besides this favorite trade, I will also share every single trade that I execute in real time as well. You can simply just copy trade me. A link to Premium will pop up directly on the screen over here. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe as well. I publish videos on YouTube regularly. See you next time on YouTube or see you in Premium. Cheers!